battling the relentlessly negative doom and gloom news media. It's the Nick Stenger Show, coming to you live from the Stenger Family Office headquarters. It's your host, Nick Stenger.
All right, ladies and gentlemen, welcome back to the Nick Stenger Show. My name is Nick Stenger. We are the Stenger Family Office. For the past 44 almost years now, the Stenger family has made it our mission to deliver both clarity and confidence to help secure your financial future. It's episode 175, The Tower of Babel, talking about the Bible story, Genesis 11 today. Is AI the Tower of Babel? We'll get into it in just 1 second. Before we do, I want to remind you of a few big events we've got coming up very soon. We've got our Wealth Insights Forum in Houston, Four Seasons, April 25th and 26th. And I don't know if we can pull the slides up or not. If we can't, that's okay. I'll just talk about them. April 25th and 26th in Houston at the Four Seasons. And you got to come to this thing. If you've been thinking about retirement, or you're a few years out, or even a ways out, and you're thinking about, what do I do about financial planning? What do I do about investments? Just want to get to know the Stenger Family Office a little bit better. We'll have our whole team down there, and April 25th and 26th in Houston for a Wealth Insights Forum. Registration is live. You have to have a custom link. Reach out to us, 630-912-8431 to get more info. And then we've got Investor Day in October 9th and 10th in Oak Brook up here in the Chicago area. Got all of our guests booked. We have 3 guest speakers this year. Usually we have 2. We have 3 guest speakers this year, and that's October 9th and 10th. We have not sent out the invites for that quite yet, but we will very soon. Let's get into it today. I had somebody call the hotline this week after watching my show last week, episode 174, and they were very upset because I said on the show that communism is bad. They said that, Nick, you really should have a White House press credentials or something to that effect to be able to say something like that. And I was thinking, no, I don't have to have White House press credentials to tell you that communism is bad. Said it last week. 50 million people die every time we try it. So not sure why that's controversial, but thank you for reaching out. Thank you for the call. It's always fun to get a little feedback. But I also said something last week that the government is bloated, and we got some nice comments there on the YouTube show. And somebody said, Nick, the government is not bloated. In fact, all of our problems are because of entrepreneurs. And they mentioned 3 specific sectors of the economy, healthcare being one. And they said healthcare is all the fault of entrepreneurs and businesses. And yeah, insurance costs are very high. We know that. And I can talk about that too. I've done some analysis there. But think about the most regulated sectors in the United States: healthcare and transportation, infrastructure. Those are all the most underperforming sectors. The most regulated and the most involved the government gets with these different pieces of the economy, the worse and worse they become. And then they said something to the effect of, well, it's just because we're underfunded. So I just pulled up a few stats, and the reality is we are spending now trillions of dollars on healthcare, on infrastructure, on all these different programs, and even on education. We spend the most of education per pupil in the world, and we're not even in the top 10 for education. So what are we going to do? Throw more money at the problem? I don't think it's money. I think we need to get local states' rights back. We need to get local communities involved. We have to get the federal government to shrink in size a little bit more and let the entrepreneurs take back over. That's when you start to see growth. So this all gets into DeepSeek. It all gets into the Tower of Babel and AI. And you saw this DeepSeek AI Chinese system that's a competitor for ChatGPT. I would just say, fool me once, shame on me. Shame on you. Fool me twice, shame on me. And you may have been fooled by the Chinese Communist Party many times in the past, maybe at least once, when they told you that their GDP growth was 10% a year, and communism finally is working. It's going to be great. We've tried it in China. Communism is doing well. And, we're building all these ghost cities. And finally, we've cracked the code. And we've got basically state-sponsored some form of capitalism, I guess. And you're thinking to yourself, well, if that's true, how come all the luxury brands are reporting double-digit sales growth in North America, in even Latin America, in Europe, and the only place they're not producing double-digit growth is China? How come the Chinese economy is so intense on pumping stimulus in right now? I don't think things are going very well. And I think if you believe the CCP, if you believe the Chinese Communist Party, everything's going well. I think you're in for a world of hurt. Now they're telling you, oh, yeah, we cracked the code on AI $6 million later, and we have the best AI system in the world. NVIDIA plummeted on the news, went down 18%. What a crazy sell-off. What a ridiculous reason to sell off. And I'm not saying NVIDIA is not going to have problems. I'm not saying NVIDIA is not going to have pullbacks. I've told you on the show a million times, NVIDIA has 50% drawbacks all the time. So it's not that surprising that you saw NVIDIA go down. But for that being the reason that China is going to come up with this system that's going to just blow away every other system on Earth. First of all, we're pretty sure this isn't for sure 100% guaranteed news that we've pulled, but we have heard that DeepSeek's using NVIDIA chips and GPUs. So it really doesn't have much to do with NVIDIA. It has more to do with the excesses of AI that people have talked about. And this gets into the show of the Tower of Babel. If you remember Genesis 11, this is straight out of Genesis 11. They said to each other, come, let's make bricks and bake them thoroughly. They used brick instead of stone and tar for mortar. They said, come, let us build ourselves a city with a tower that reaches to the heavens so that we may make a name for ourselves. Otherwise, we'll be scattered all over the face of the whole earth. And what did they want to do back in the Bible days? They wanted to be gods. They wanted to be like God. They wanted to build a tower to heaven. And they thought that would make them God-like. What did God do? He humbled them. And he said, I'm God, you're not. And scatter them all across the world. Well, I think AI, in some respects, is headed in that direction. You've heard the quotes from Yuval Noah Harari. He's an atheist professor who says that thanks to AI, we can become gods, that we will be the God of our own universe. And I think there is a point where the real God will say, no, you're not. You are not God. I am God. And AI could ultimately end up as the next Tower of Babel. So there are excesses in this tech wave. And so when you hear about the AI tech wave and you hear about, oh, AI is going to save the world and it's this next big thing, you got to get into AI stocks, just be careful because a lot of these companies that are .ai or say, oh, you know, we've got this new system where we've cracked the code and we're using artificial intelligence. AI is really not all that new. I was talking to a gentleman this week who's been studying AI for 20, 30 years. AI has been talked about for forever now. It's just become a reality because of the quantum computing capabilities for the high-speed computing capabilities of the GPU. So it's not really about an AI story necessarily, in my opinion. It's more about the computing speeds of what NVIDIA has done, what some of these chip manufacturers have done. And so we've had breakthroughs in computing speeds. We've talked to engineers. We've talked to data science people. We've talked to IT folks who have said, hey, Nick, we used to take a year to do a big data project at our company using CPUs. Thanks to NVIDIA's GPUs now, we can get that project time down to 2 days. So that's what it's really about. It's not really about this AI Tower of Babel, this rush to be godlike. That's part of it. But what's way more important is the computing speeds. And that's what is enabling AI at this scale. Now, robotics has been around for a long time. You could say robotics is a subset of AI. You could say machine learning has been a subset of AI. These things are not new. We've had robotics and machine learning for years. You've watched Boston Dynamics with the dog robots and the humanoid robots, and some of it's a little spooky, kind of reminds you of Westworld if you ever watched that show. I think it's an HBO show, and the humans and the robots combined basically. So a little scary. You've seen some of that. Nothing really radically new, but what has Elon Musk done with Tesla? What has Elon Musk done with some of his companies that's so unique is he's used the power of AI, technically, of machine learning, really, of robotics, and gathered all this data, and he has made his Tesla cars the most efficient robots on Earth. That's basically what Tesla is. It's a robotics company. It's an AI company, I guess you could say, but it's really robotics. And I was watching a video this morning. One of the people on our team sent me this video of the Teslas leaving the factory completely unmanned. There's nobody driving it, and they drive themselves to the ports where they're going to be shipped out. I mean, that is really cool. That's really neat. That's really the story of what's going on. So the reason AI is such a big deal right now, the reason it's being talked about so much is because people are looking at population trends, and they're saying, hey, the World Economic Forum, the UN, have said we have a population crisis. We've got to have less population. And by the way, whenever you hear that, you're like, maybe you should volunteer. If you're saying we should depopulate the earth, why aren't you raising your hand to sign up for that first? They never do. And anyways, they're saying we're going to have a population crisis. Well, now you saw the Chinese Communist Party, who had the one-child policy. They had just horrible atrocities, killing the next generation, the second babies, getting rid of them. We all know about this. They said, well, wait a second, we don't have enough new babies to replace our baby boomers, to replace our elderly. So they increased the one child policy to a two child policy. They're like, oh, wait a second, that's not working either. Now we got to have a three child policy. And anybody with a brain is saying, why would I have three kids in China? This is absolutely ridiculous. I'm not going to have more and more kids in a place that's got a complete mess on its hands. And you may not like that I said that. And you say, Nick, look at all these pictures of China. Look at all the cities. Look at all the, well, hey, if they're doing all this stimulus, you have to ask yourself, why is that? What's really going on behind the scenes? Because they've propped up their economy with these ghost cities, this real estate bubble, and we really don't know what's going on. We have no idea what's happening other than the fact that you see Porsche sales weakening in China, like I mentioned. You see Ferrari sales weakening in China, but growing everywhere else. And that should be a sign of concern if you're investing in China. So I always tell people, if you're going to be investing in China, just be prepared. Pretend like you're investing in the Soviet Union in the height of the Cold War. If you think that was a good idea, then knock yourself out. Go all in. We've said, no, we're not going to do that. We're going to be invested with the best entrepreneurs right here in the U.S., which, by the way, many of them are Chinese. Many of them are Japanese. Many of them are Germans. There was a great Wall Street Journal article this week talking about how the German economy that relies on exports is crumbling. It's really faltering. Their exports are way down. They haven't had innovation. Why? Because they've had a socialist push. Now, I'm sure because I just said that, somebody's going to call in and say, Nick, you can't say socialism is bad. We got to have well, okay, all I'm doing is I'm showing you real results of countries. Here's Germany with socialism, here's China with communism, and here's the U.S. with capitalism, with democracy. And I know it's not perfect. I know it's not, everything's not all rosy and great all the time. But you can't argue with the fact that if somebody wants to start a business, they want to be here. That's the reality. That's why we keep our clients in the U.S. So what's going to happen with AI long term? I think some of it's a bubble. Absolutely. We could see a Tower of Babel crumble. We could see some of the .ai companies that have run away too fast have some real issues, but it doesn't erase the fact, and while we'll have volatility in the meantime, it does not erase the fact that there's real things going on with computing speeds, with chip speeds. The fact that I actually just bought my dad a Apple Watch, and I was amazed by this. I actually never really used one a whole lot. I've seen them a bunch of times, never really used it myself, helped him set it up. And it's absolutely incredible. This tiny little Apple Watch, pretty sure producer Owen, you've got one. It's like this big. It's got a chip in it that is more powerful than any computer was back in the 80s. I mean, if that doesn't blow you away, I don't know what will. That's absolutely incredible. And the fact that it can call people, you can text people, you can get on the internet, you can get on your email, literally on your wrist, is absolutely insane. So just watch that technology coming, because that's the real secret sauce of the U.S. economy, of entrepreneurial tech growth, not this just .ai craze. That can come and go. We don't want to chase those bubbles. We don't want to chase those hot new ideas. We want to go after the tried and true pipes and wires economy, which I've always told you about. Here's what's coming out on the sector side of things. FactSet has released its earnings insight for the quarter. They say that the best sectors right now are healthcare, technology, industrials, not making individual investment recommendations. All that to say, though, you're seeing sector rotation. And so what sector rotation is you see some stocks do well, some sectors do well in certain years because of various trends or because they were undervalued. And then in other years, they don't do as well. And so if you ever look at one of those periodic tables of sector returns with all the different colors on it, you've seen this before. Sometimes the best sectors in one year go to the bottom the next year, and sometimes the worst sectors in one year go back to the top. That's sector rotation, and that's the lifeblood of a bull market. All these people who have told you for the past few years that it's just 7 stocks driving the market, that it's only technology, that it's a big bubble, they're just not looking at the data, in my opinion. You're seeing energy companies now take back some of the lead last year, struggling a little bit this year, but doing pretty well nonetheless, paying great dividends. You're seeing this new wave of innovation with nuclear. We'll see where that ends up long term. But look at some of these companies out there that you never thought could produce 60, 70% returns. Like Walmart last year produced this, I think it was 75% return. So you're seeing this rotation through different companies. I had the question last week of, Nick, isn't the market a bubble? Aren't we in this point where every stock is just overvalued? Doesn't it remind you of 1999? To my point, I say one thing, and then I come back with another point, which is just to say there were 8 or 9 years leading up to 1999 before the bubble popped. So don't let the bubble scare you of 1999, because that's not how most of this worked operationally for people in the 90s. What they were doing was they were invested in 1992. They were invested in 93, invested in 94, 95, 96, 97, 98. And it wasn't until 1999 until you had the bubble burst. Well, that's the reality of how these bubbles form. We're nowhere close to the PE ratios that we had in 1999. We're closer to a 1993, 1994 PE ratio. And number two, the other point I bring up is not every company's overvalued. So yeah, there are some .ai stocks out there. There's some Tower of Babel companies. I could be wrong. My opinion, though, are trading at ridiculous multiples. I won't name too many names here, but you've seen stocks that are now in the top 50 of the S&P that are trading for 450 times earnings. Some of them don't even have PE ratios, meaning they don't have earnings. They don't make money. They're losing money still. And so you just have to be careful with segments of the market. There are high flyers out there. There's no question. There are stocks that have run away, but that's been true in every market. That was true in 2010, 2011, 12, 13, every year ever. In history, there's been stocks that are overpriced, but there's also stocks that are undervalued. And so that's part of our job for our clients, is to say, hey, what looks cheap? What companies are growing profits at a reasonable level, that have a real business model, but also pay you a dividend, or also still have some good valuation metrics built in their stock prices. And again, in every market, there's opportunity. You saw this during the banking crisis of 2021, when all these banks were selling off, and basically people were throwing the baby out with the bathwater, saying all banks were going to struggle. Easy example here is you looked at the highest quality banks. You looked at banks like JP Morgan, where they were paying basically nothing on deposits, still getting really nice net interest margins. And JP Morgan was trading at 94, 95 bucks a share. Now it's trading at 250, 260. Why? Because it was a value. It was a buying opportunity for patient investors. So are there certain stocks that were overvalued in 2021? Of course. You saw the ARK investment fund with Cathie Wood, who now is bragging about all of her capital losses. She deleted the tweet on Twitter, and she was saying, hey, one of the great features of ARK is we're never going to have capital gains taxes again because we've got all these built-in losses. Not sure if you want to brag about that, but she did delete that tweet. And you saw that ARK fund bring in $50 billion in assets. It might have been more. It might have been $70 billion across all the different funds. People were chasing that wave. They were chasing the next hot thing. And we said to people, hey, just be careful. Yes, some of that's interesting. Yes, some of that could be helpful down the road. But when you go out and you pay 300 times earnings for a stock, you got to be really careful. You better really hope that you know what you're doing. And that's why we've kept people in the tried and true, the blue chip U.S. companies. And if you don't pick them up exactly on the way up, or you don't get into the IPO before it rips up, don't beat yourself up. You're going to have a chance to buy it, but let it get some maturity in the market. Let it prove itself out in the market. Pay the right price for these companies, and you typically will do okay. We had Dr. Siegel on our show a couple months ago. We're going to have some clips out about on that show coming up very soon. And Dr. Siegel said, if you're paying the right price for stocks, you almost always make money. The problem is when you pay the wrong price, and you may have a little success at the beginning, but in the end, very tough to get returns on some of those companies. Another question we get, and then we'll wrap up the show this week, is, Nick, should I get more conservative as I get closer to retirement? This is a common question. And I just go back and I say, please define conservative. So yes, it's true. You need to adjust your plan before retirement. There's no question about it. And we're not cavalier with this. In fact, we take risk management very seriously. But like I've said on the show time and time again, you cannot start from a risk-based perspective. You cannot start with risk being your main issue that you're concerned about. You need to start with your goals, with your financial plan being your main concern. And so when we start out and we bring in a new prospect to do a meeting, and they're asking us questions, we're asking them questions about their financial plan, we never, ever, ever start out with, what are you thinking about risk, or how do you feel about the markets? We've studied this now, and there's been plenty of studies done on this, where when the market's way up like it is now, and the S&P is trading at 6,100 points, and NVIDIA's at all-time highs, and you ask people about risk, they say, oh, I love risk. Nick, give me more NVIDIA, put everything in Bitcoin, get me Dogecoin, get me meme stocks like we had a few years ago, pot stocks, solar companies, whatever the hot new thing is. And I don't need any risk management. Nick, I can't believe you have money in treasuries in my portfolio. That's so stupid. You're losing me money on those treasuries. I say, that's not the right move. Absolutely not the right move, especially if you're going to retire, because all you're doing is looking back at the past 6 months. And then on the other side of it, the market's down. We're in COVID. Market's down 30% in 3 weeks, or you're in 08 and 09. Market's down 60% in a few months. And you're saying, Nick, you know how I feel about risk right now? I hate it. I don't want anything to do with risk. I don't want to be in stocks. I just want to be in a bunker in my backyard. Give me some canned food and some gold bars, and I'm never, ever getting back into the stock market again. And that's the exact opposite thing that you should be doing when the market's down 60%. What should you be doing when the market's down? Buying more. And so the reality is if you start from that goals-based perspective, you may not end up where you think you are, because the biggest risk to retirees, as Nick Murray has pointed out time and time again, is not stock market volatility. Risk is not the same as the stock market going up and down. Risk is rather defined as the chance of running out of money during your lifetime because of inflation. So just be careful with how you define your risk. And we are in an environment today where I think inflation is going to be higher for longer. I think, yes, we're going to have great policies for the most part coming out of the White House here, but some of them are inflationary. There's no question about it. Be careful. We came out of 08 and 09 at 1.5%, maybe 2% inflation in some years, but mostly 1.5% inflation, which is effectively zero. And now we're about 3 to 3.5%. In some parts of the economy, we're about 4% inflation. That is dramatically higher when you compound it over 30 years. On a year-to-year basis, the difference of 1.5% or 4% really doesn't show up that much. But when you compound that for 10, 20, 30 years of a retirement plan, be careful what you're invested in. You got to be able to beat inflation. The only place, and this isn't just Nick Stenger saying this is Dr. Siegel, Stocks for the Long Run, 200 years of market history, has said that the best asset class to beat inflation is equities. Think about it logically. You're going to Costco, you walk in there like I did last weekend, you buy you were like, I'm only going to get blueberries this time, I promise. And the next thing you know, you walk out $400 later, you're like, what happened? Well, what do you do? What do you do with your $400 Costco trip? You go buy Costco stock. And by the way, I accidentally got there a little too early on a Saturday one time, 20 minutes early. There's 50 people waiting outside to get into Costco. I mean, that's where you want to have some of your money. And again, not individual investment advice, but it's somewhere where we've had client capital for a while. What about if you go to the gas station and you fill up your car? You're like, I can't believe it. Gas is $4 a gallon still. Well, go buy some ExxonMobil stock. And that's how you beat inflation, because these companies maintain their margins over time by raising prices. And so that's the secret sauce of the plan. What's the price you have to pay for that inflation protection? Well, it's volatility. There's no such thing as a safe stock. There's no company that's going to protect you in a downside, in a downturn. But what you want to try and do is buy companies that are going to make it out the other side alive. And if you look at balance sheets, if you look at earnings quality, if you look at ROE and ROA and ROI, and you do some sifting through the garbage, you're going to find a handful of companies that will do just that. What do you do in the meantime? You have some of your safe money set aside to cover your living expenses. We like to have 3 to 5 years of safe money when you're retired in treasuries, not in the bond market where it's subject to all these interest rate fluctuations and credit risk and all the rest of it and geopolitical events, but rather just safe 30-day U.S. treasuries or money markets. Why? So that you don't have to sell your stocks if we're going through a downturn. And if you do that over time, it's a simple plan. It's a simple strategy. You rebalance once in a while. I think you're going to make it. And so that's how, my opinion, that's how I think most people should be set up when you get to retirement. So start with that goals-based plan, not the risk-based plan. There's really two types of investors. I'll leave you with this before we wrap up. One is our clients who have been with us since the 80s. And these are the veterans of the market, as I would call them. And I call them for a review call or an annual, we have a meeting in the office. And they're like, Nick, you're preaching to the choir. You're telling me the same stuff that you always say. And I don't need to hear this. I don't need to hear that the market's going to be okay. I don't need to hear that the market's going to go down and not to panic. I've been through it 6 or 7 times. And by the way, a lot of them have been through it with us 6 or 7 times. And so they know not to panic. And by the way, I know when you're logging into your account because we get a report, we can see what's going on if somebody's logging in 3-4 times a day versus logging in once a month. Well, these market veterans with us, some of them don't even, their login gets bounced out because they haven't logged in 6 months, and the technology says you got to re-log in at least 6 months. Well, those are the people that make the most amount of money long term. They have millions and millions of dollars with us because they've just stayed on their plan. They don't get nervous in the service, as my grandpa used to call it. And they just keep going and buy some more stocks when they got cheap. And they made most of their money in a bear market, even if they didn't know it at the time, like Shelby Davis said, and they're fine. And then you've got the other types of investors where they're constantly worried about the future. They're worried about ups and downs. They're worried about the next correction. And they sit in way too much cash, or they try to buy an annuity, or they go into the bond market, and they're always trying to get in and get out and know when to hold them and know when to fold them. And I've said this on the show before, but I'll just say it again. I mean, do you really think that you in Naperville, Illinois here, or Houston, Texas, or Baton Rouge, or wherever you are, you're going to be able to outsmart the traders and the market timers and the hedge fund guys and all the CFPs and MBAs and CFAs and PhDs in New York that have 20 different Bloomberg monitors in front of them trying to make a living out of this and still underperform the stock market every single year? I mean, you really think you're going to outsmart these people? So the reality is if you just stayed on your plan and just checked in every 6 months, you would have outperformed all those people who were trying to trade and time the market. So stay on your plan. Don't panic. I think some of the AI bubble is overdone. There is a bubble in some of these AI companies. I'm being very clear with you on that. I do think some of these companies have run up too fast, but there's a lot of companies in the stock market today that are undervalued that are still good places to be. So brace yourself for some volatility. We're going to have these pullbacks. We're going to have these corrections. We're going to see some doom and gloom news. But when it's all said and done, if you woke up 6 months from today or 6 years from today or 16 years from today, I think you're going to be happy. You just stayed on your plan. Thanks for being with us. This was episode 175. We'll see you next time, episode 176. If you like the show, share it with your friends and family. And please don't forget to subscribe on YouTube, Apple, and Spotify. We'll see you next time.